I made a mistake and it costed me one of my credit cards. Hey there, welcome back. It's Victoria. And in this video, I'm not going to be sharing any exciting news. It's actually very sad news because I lost a credit card. But I will be going over why did this happen? How did they even cancel my credit card without even letting me know about it? How will this impact my credit score? And lastly, what you can do to avoid having this happen to you. If you want to know what happens when you close an account, whether that's your bank closing account or you closing account, you'll want to watch this video. Be sure to stay till the very end because I'll be sharing with you how you can avoid having this happen to you. If you're interested, give this video a thumbs up and be sure to subscribe to my channel and turn on that notification bell. I do post about personal finance and investing every week. Why did they close my account? Well, there are a few reasons why credit cards decide to close your account. It could be due to inactivity, it could be that you're not in good standing and you have payments to make, or your account becomes delinquent. Personally, for me, the reason they closed it was due to inactivity. I didn't know what the period of time was before they closed your account. Let me explain my situation. It was my Bank of America Travel Rewards credit card. I actually haven't used that card for a few months, which is about 7 to 8 months now before they shut down my credit card. They don't give you any warnings. They don't tell you that we're going to shut down your credit card and that you need to start using your credit card. I was frustrated because they didn't tell me, and even a few weeks before they had closed my account, they were still sending me emails. They didn't let me spend using the card before they closed it. The frustrating part is that once your account is closed, you cannot reopen it. Now, I did speak to Bank of America representatives, even the manager, and a whole bunch of people, and this took a few hours of calling them because I wanted to see if there's any way I could bring back my account. After countless hours of contacting Bank of America, it was clear that my account was not going to be reopened. And the only way for me to get another credit card, as mentioned by a representative of Bank of America, is that I will need to reapply. Now, I would not reapply for this card again because there's a reason why I haven't been using it in the first place. Honestly, it was just a reason for me to close it down and not worry about it anymore, but I didn't want it to hurt my credit score. I've only heard people say that you should never close an account. So obviously I was extremely scared about this happening and how it could impact my credit score. What does a closed account mean for your credit score and how is it going to impact your credit score? I'm going to be going over that right now. This closed account will affect two parts of my credit score. The first one is the credit utilization or the amount owed. This makes up 30% of the credit score. If you don't know what credit utilization is the amount of money you spend on your card out of how much available credit you have from all of your credit lines. The utilization score is a percentage. Think of your credit limits as the pie and you take a portion of your pie as how much you spend every month. You also normally don't want to eat a whole pie by yourself, just like your credit spendings. You don't want to use your whole credit limit. For the best credit utilization ratio, you want to keep below 10% of your credit limit. Now let's take a look at an example. If I own one credit card and this credit card has a $1,000 credit limit, if I spend $500, that's a 50% utilization rate. And if I spend $100, that's 10% utilization rate. Now, let's say that I do have two credit cards. Let's say that one credit card has a $1,000 credit limit and the other one has also a $1,000 credit limit. Combined together, I have a credit limit of $2,000. If I do decide to spend $1,000, then I have a 50% utilization rate. Now, let's say that they close down one of my credit cards that has a $1,000 credit limit. Then I'm at a 100% utilization rate if I have spent $1,000. Now this is very bad because this can take a toll on your credit score and you want to make sure that you never go above 30% and it's best to keep it below 10%. So because my Bank of America credit card had a credit limit for me, it helped increase my overall pie. But now my pie has shrunk a little. The good thing about my situation is that I normally keep a very low utilization rate of 1%. One of my highest credit limits of one of my credit cards is $25,000. So I'm able to keep and maintain my low utilization rate. It will not hurt my utilization rate as much as long as I keep it under 10%. Now, the second thing that it will affect is my credit age. This is actually going to hurt my credit score because the credit age is the average age of your open accounts. Let's focus on the fact that it's the average age, which means that it will look and account for all of your credit cards and figure out what is your average age. Let's say that, for example, if you have a credit card for 5 years, you have a credit age of 5 years. That's the average of the one credit card you have. But let's say that you have 2 credit cards, one that has 5-year age and the other one has a 1-year age. This just means that instead of having an average age of 5 years, now you're accounting for the new credit card. This is going to decrease your credit age to about 2.5 years because it's the average of the 2 credit cards you have. This is the reason why many people recommend not closing any accounts, especially your first few credit cards. My Bank of America was my second credit card, and so it did take a big hit on my credit score. I recommend that the first few credit cards that you get should be free credit cards. And the reason for that is you want to maintain and hold those for the longest period of time. You never want to shut them down. If you have an annual fee credit card as your first one, you're going to have to justify paying that annual fee every year. Now, I know my account being shut down is solely my fault. I wasn't being more proactive, and especially with the pandemic, I'm also spending a lot less. No matter what type of account you close, for example, a credit card that you don't use anymore, or a loan such as student loans or a mortgage, even if you were to close it or just pay it all off, it can also take a toll on your credit score. But before we continue, be sure to give this video a thumbs up and drop a comment below. Let me know if you have ever gotten a credit card shut down or if you have strategies for maintaining good standings for all of your credit cards. Now, here are my recommendations to maintain good standings for all of your credit card, especially if you have a bunch of them. I would separate my expenses based on how much points I can get from each credit card. So for example, I recently got the Amex Cash Preferred credit card. It has 6% cash back on all streaming services such as Netflix, Hulu. So I will pay all my monthly streaming service subscriptions with this card. And then for my Chase Sapphire Reserve, I do get 10x on LiftRise. So that's where I will be spending with that card to maintain good standing for that card. So as long as you can separate your expenses and make sure that it makes sense for you to spend on this card versus another card, that way you'll always be using that credit card and it won't be shut down. I hope you enjoyed this video, and if you found any value here, please hit that thumbs up and subscribe to my channel. It really helps with the YouTube algorithm and supports my channel. If you're interested in the best credit cards to build credit, check out this video here.